Hi everybody, this is Jeff, sometimes known as the Option Guru, and in this video I'm going to show you the way that I look for candidates for double calendars and the reason why I do a double calendar and how I make adjustments on them. So the way I like to start out is you want to, like I mentioned in my blog, you want to actually look for candidates that have a front month volatility that is higher than the back month volatility. And the reason for that is you want to sell the option, which would be the front month, for a higher price than what you're going to be paying relative for the back month option, which would be the same strike. And one of the ways that I look for candidates is I select this Market Watch tab up here on the Thinkorswim platform, and what you see here actually is my what I call my A+ list, which is the list where I usually 99% of the time make my option plays off of the stocks that are in this list. Now you'll notice over here in this column the two on the furthest on the right, which is they're labeled front volatility and back volatility, and you can get these columns to show up just by right clicking on the column header and selecting customize, and you can see that you got front and back volatility. If you want to remove it, you just click remove. If you want to add a column, you just click add, and then once you have it under the current set here, you can actually move it up or move it down anywhere that you want on the display. So as I mentioned, what I do is I take this list and I basically sort it by the front volatility, and it either does it ascending or descending, so I want it actually descending from the highest. And because I want to pick a stock that has a high volatility, but it's also earnings season and I have to be careful about earnings also. You can play these up to earnings. For instance, the Intuitive Surgical that I mentioned in my blog, and we're going to be covering it on this video a little bit, actually has earnings announced after the market close the day before expiration day. So I figure that I can hang on to that double calendar until maybe the Wednesday before, or maybe even that Thursday. But it gets kind of dangerous Thursday. You may have what's known as a volatility collapse, and that will affect the prices on your options, and you'll lose money for the most part in a situation like that, because believe me, if you've been following me at all, you know what Priceline did to me a month or so ago. So again, I sort by front volatility, and I look and I compare that to back volatility. And remember, I'm looking for a front volatility that's higher than the back. But if there's like a huge difference, it's probably because of earnings. For instance, this one here, AMED, actually does have earnings on 4/28, so this might be a good selection actually for April calendar of some sort, either a single or a double calendar. This would probably be a pretty good one. We may actually grab that one as an example. And the next one down is CLF, and that's pretty even. It's within the 2%, like I mentioned also. Front volatility is 55 and back is 56, so that's within the 2% if the back is higher, and that's 2 percentage points, not 2% of the value. Next one down is RIM, and I know that they have earnings coming up pretty soon. 55 Apollo, their earnings are on 3/29, actually in a couple of days, so we'll just stay away from that one. Another one that was of interest to me, and one that I'm pretty familiar with, is Joy Global. This would be probably a pretty good one to use as an example because we don't have to worry about earnings at all. And we could take a look at it to see if there's any money in it. So let me just make a note. I go down this list and I make a note. So I have AMED, and I'll put that on my list, and I have Joy Global, and that's on my list. And you can just arrow down on these. It's a little bit too far apart. That's not too bad, but a lot of them have earnings coming up. So we have our list for right now. I have 2 candidates that we can take a look at. So that's the way that I find my candidates. Also, one of the interesting things that I've added to this particular scan, or first of all, let me tell you how I get this in here. Any sort of watch list that you have, you can import into here. For instance, my list of plus or minus a couple 50 stocks that I watch are on this A+ list. The stocks I currently have open plays on, open option spreads on, are on this list. And you can either create this or you can import this list and create a watch list and have it come up on this display. I could look at the entire NASDAQ if I wanted to and do that, but that's just too much for me to deal with. The other thing that I like to look at once in a while is the Sizzle Index, and this is the Sizzle Index, and basically it just tells you the difference in option volume compared to a 5-day average. And they split it up between calls and puts also. So if you're wondering who's on the bad side of the market, well, it looks like there's a lot of puts being traded in NOV, whether they're being bought or whether they're being sold. Well, they're being bought and sold, basically. But is that a good sign or a bad sign? No, it's just a piece of information. Because I can tell you, if I'm bullish on a stock, I may be selling puts. So it doesn't really tell you anything about where the stock is going. It just tells you that there's a lot of activity on it, and you may want to take a look at it. So what we want to do then is we want to go over to our Analyze tab. And this is the picture of Intuitive Surgical, and we'll cover that a little bit later. But the first thing I wanted to do was look at the 2 candidates that we have. And the first one we want to look at is AMED. And we'll go to Add a Simulated Trade. And the way that we do this is I always go to the front month and take a look at what's happening here. It has very nice volume on the options that are close to the current price of the stock. So I want to pick one that's like just out of the money. So I right click and I say I want to buy a double diagonal and a double calendar. And it brings up my double calendar. Now it gives you the call and the put both at the same price. So what I usually do is I start out with the put at, in this case, a 55. So I just change this to a 55. Sorry you can't see the drop down. I can't get everything in this window. So I change that to 55 and I go to the risk profile and I take a look at it. Now when I talk about a good profit tent, this is a good profit tent. The peak here is actually at the strike price of your options. So that's going to be your greatest gain. And in this case, looking down here at this box at the green number, which indicates the price at expiration, we're looking at a maximum gain of approximately $165. And if we look down here, we're looking at a risk of 350. So that is almost a 50% gain for a maximum. If you're not familiar with the risk analyzer in Thinkorswim, you may want to get a little bit familiar with it. I'm not going to really teach that on this video, but just to show you that this is a very nice looking tent and this could be a very nice play. We need to move our risk analysis out to the actual expiration day, and we get a look at at how much risk we might have in this particular trade and what our chances are of it falling between those strike prices. And it doesn't look too good. We should probably go over and take a look at a chart of AMED, and we can see that it has recently, over the last 4 days, made a kind of a bearish move here. So what we could do, if we think it's going to continue in that direction, is to go back to the Analyze tab, and we could tweak this so that we could get the current price in the middle of the tent, which means that we would have to change our put to 50. And if we change our call to 55, you can see that we're not in the middle. The current price is not in the middle. We're not very delta neutral. We like to be kind of delta neutral on these things because we can't predict where the market's going to go, so we want to sort of be prepared for anything. But if we think this stock is in a new bearish kind of a trend, as this chart may be indicating here, as a matter of fact, we've almost gotten down to the bottom of this channel here. Whether it's going to bounce off of it or not, we don't know, but we think it's going to continue moving down for the next day or two, and we want to be prepared for that. So this would be a pretty decent trade, I think, for this bearish stock, or this bearish move on this particular stock. We're still going to collect around 150 bucks for max, and we have a pretty nice base that goes from 57.50 to 47.90, so that's a pretty wide base. Let's look at 47.90 on the chart, and that is actually down around here, so that's not too bad. So by expiration, all it has to do is stay above here and we will make money on this trade. But as I mentioned in my blog, it's very easy to make adjustments on these, and I'll show you that. Let's look then again at Joy Global, a favorite of mine. I've been in and out of options on this for many years. Oh, I kind of cheated here and I already have one set up. I must have been looking at this before. But here you can see that we have a 55.60 double calendar already set up here for analysis, and we can see that, you know, the tent has a little bit of a sag in it, but it's not too bad. We are looking at $80 to $106 in max profit based on 287. Wait a minute here. Let's change this here. Based on $287 of risk. So that's the most we could lose, is $287 on this play, and the most we could make is around $105 ideally. Let's look at a chart, and we see, oh, this is perfect. I really like these. It's just not going anywhere. We don't have any earnings to worry about. This is really nice. So the chances, the probability of this actually expiring inside our profit tent is pretty good. Even though it's telling me that there's a good chance one deviation, this is one deviation here, 62.80 and 51.38, is falling outside of the profit tent, but you know, I really think that that's okay. And when the next thing I'm going to do is show you how to make adjustments on these, and you'll see that it's pretty easy and it works very well. So this is another pretty good candidate for, even for this month, to make in 3 weeks basically $100 on just one combo. That's a pretty decent thing. $287. If you want to pump that up, you can. Say if you want to do 5 of them, it'll cost you $1,400, and you could make max 500. So that's you know, 34%. Not bad at all. Nothing to sneeze at. Although AMED actually looks like a better trade, but it's riskier because it's moving, so it probably will require an adjustment. But again, like I mentioned in my blog, let's go back to AMED. Like I mentioned in my blog, the risk is if it decides to whipsaw on you, and that's definitely a possibility with AMED. It could come down here around this channel, the bottom of this channel, bounce up, come back up to here, and you may make an adjustment down here, and then it comes back up to its upper resistance and makes a fool out of you. So that's always a possibility. It would be above that 60 strike. It may still be in the profit tent. Let's take a look. No, it would not. It would not. I mean, we changed our strike from 60 to 55. So getting whipsawed around could cause you to lose money. So doing adjustments. Let me show that. Let's go to Intuitive Surgical, which is a live open trade that I have right now. You can see that because the front month volatility was so much higher than the back month on this, if we take a look at the options at the volatility, implied volatility, you can see over here front month is 48 and the back month is 38. That's 10% difference. Or actually a July, I'm sorry, we have a July here. That's actually 48 to 36, so that's 12% spread on the implied volatility, which makes for, as you see here, a very wide base. You notice how the strike price of the option, how the sidewall of the tent slopes very gradually, and that is due to the implied volatility difference between the front and the back month. So you can see here, this is the current price right here, which is $342 was what it closed at on Friday. And this recording is being done on a Sunday afternoon, so everything, you don't see any numbers jumping around on you or anything. But you can see that I did one play on this, and my max profit off of I believe it was a $1,900 investment, is $1,300 in this particular case. Now, keep in mind also that I got into this trade quite a while ago, and let's take a look at the chart. I opened this trade on 3/16, so I've been in it for a while, and of course the longer you're in it, the wider your tent's going to be also. And actually, the longer you're in it, the greater percent gain you can get based on the maximum gain and based on what your at risk is. So on this particular one, let me go back and look at my spreadsheet real quick. On this particular trade, and we can look at it here, in case you're wondering, I use OpenOffice, and this is their spreadsheet. It works just like Excel, and it's free, and it's really nice. I like it. So this trade cost me $1,900 total, and these are all of my what I bought and sold all the options for here, and the total was $1,900. So I go back here and to my analyze, and I could max gain is around $1,350 for this particular trade, and really it's over $1,000 anywhere in the middle of the tent. But now it's starting to creep over here, and it's starting to get close to my break even. If we look at the chart again, you can see that, like I mentioned in my blog, this is an instance where the stock is drifting down, and it may continue that trend, or it may hit. Do we have support here anywhere? I don't have that drawn in on this particular chart. I usually do most of my charting on profits. Well, we actually have support, a good solid support here around 320. Will it bounce? Will it hit that and bounce? I don't know. But you can also see that here's the earnings, and that's going to be happening on 4/15, which is Thursday before expiration. So I plan on being out of this on Wednesday, provided I don't have any sort of volatility collapse like what happened to me with Priceline. So what's going to happen? I don't know. But let's get prepared for what might happen. All right, I may want to do an adjustment. So I can throw an adjustment in here. And what I would do is probably get another put calendar down here. If I needed to adjust on the call side, then I would buy a call calendar. But down here, I will buy a put calendar. So I go to add simulated trade, and I want to do a put. Well, let's see what a 330 will do for me. So I just say buy, and I'm only going to buy a single calendar. Go back to the risk profile, and you can see that, geez, I'm almost delta neutral. It's only 11 here. Without that, my delta is 13. With that, my delta drops down to 11, almost in the middle of the tent, but the tent looks ugly. Well, why does it look ugly? Well, because my back month is May, and it should be July to match the other one. And also, I think that 330 is probably a little bit too close to the current price. So let's bring that down to a 320. Now that is starting to look good. See how much wider the profit tent is now? And even with, I have to spend another $900, so my percent gain is going to drop a little bit compared to my at risk. But that's okay, because I'm still profitable, and very nicely profitable, even $500 down to 3, if the stock drops to 314. And if I look at the chart, 314 is down here, and will it drop down there? I don't know, but that's a pretty good deal, I think, for doing an adjustment on this. Can I go even further out? Well, let's try a little bit further out. Let's try 310. Well, that stretches it out even more and brings me down to still a decent profit at 307. And it's a little bit cheaper at $835 instead of $900 plus. So this makes a very nice looking profit tent also. If you if you think that the stock is really going to continue drifting in that direction, then you can sell your call calendar. And let's see if we were to do that. We just hold down the control here and say analyze closing trade, and that would make our tent look like this if we did close that, and we would be able to collect $730 to offset what was the other one, 800 something? Yeah, 835. We get 730, so this trade would only cost us $105, and we'd be still back up to the original 1900. We'd be up to $2,000 and still making good potential of making $1,000 off this trade if it falls anywhere in here. So that's how you can do adjustments. I probably would not sell this call at the same time that I'm buying the put calendar. I might sell it later, but for right now I think I'm just going to leave it right where it is, because this stock can really move. And if you look at the chart, this is a 306 to 340 move here. So $30 is not out of the ordinary, especially at their earnings announcement, but I'm not going to be in it at that time. But even so, from this point here, 340, to here is 362, so that's $22 there in just 5 days. So this stock can move. And if the market, everybody keeps talking, man, there's going to be a pullback and it's going to be huge, and well, okay, if there is, you know what, like I mentioned, if we do get a pullback and it's really huge, then we sell everything. Let's go back to the way that the picture looks right now. Okay, this is the way the picture looks like right now. Let's say that this stock suddenly, everything started dropping. Okay, it drops down here Monday, drops down here Tuesday. I sell everything or I close everything because I'll be buying some things. I'll close everything except the long put that I have down here on this end. And that long put is this one right here, the 340. And by the time the stock is down here at 327, it's deep in the money on that 340 put. And probably, we got some very good looking delta on these, and we might be making almost a dollar for dollar move on this. So every time it moves a dollar, you make 100. So it would be a good thing. So I don't worry about that. It's when it gaps hugely and it costs me so much to get out of what I'm in, and I'm afraid the stock is going to stall at the gap price or pull back. That's when it gets scary. So in a situation like that, I probably would just exit the entire trade. There's not much else that I can think about. Let me just go back to the spreadsheet, and I think if you've been following on my blog, you have seen these charts on my double calendars. But basically what I do is I want to keep track of, under what scenario, if I do this or if I do that, if I want to like sell this and buy that and add this calendar or subtract that calendar. Keeping track of it like this helps me to realize, for instance, if I closed everything except, like I mentioned, the long 340 put, well, I would have a closing price in every one of these except for this particular cell right here. And then what I can do is I can just fudge and put in numbers, any sort of price in there, and say this is the price that I'm shooting for. It's at this current price. I'll be at this profit or I'll be at this loss. So it's really kind of handy for doing that. I could rely on the Thinkorswim platform, but I don't know. Sometimes I actually kind of feel like I get a little confused with it, and I feel more comfortable doing this. Plus, it gives me a historical record all in one spot, all for each particular complex spread that I have. I don't usually do this for bull puts or bear calls or anything like that, but I do it for my calendars and my double calendars and my iron condors, just so that I can keep track of what's going on where. And you can see, gold is closed. I need to get fix that. But anyway, you didn't see that. Anyway, this is the ISRG trade that I have right now, April-July double calendar. And there's the total cost was $1,900, and as I close each one or add more, I just stick them into this particular table here, and I know exactly where I'm at with the trade. And that's important because this helps me with my exit strategy. I know in advance under what condition that I'm going to do what, and whether I'm going to exit the entire trade, whether I'm going to make an adjustment and buy another calendar on it, or whether I'm going to close all my positions except for the long put or call, depending on which direction the stock is moving, or if I'm just going to close the whole thing. So I'm always prepared and always ready with what to do. And in today's market, with it's in an upward trend. There's some stocks that are coming down. There's some stocks that are not doing anything. They're they're trending in a stagnant channel. There's some that are whipsawing back and forth. But if you get the right volatility and the right calendar combination, and you get in at the right time, then you have a very good possibility of making some really, really nice money on double calendars. So I welcome any comments, any corrections, any ideas or anything else that anybody has. I welcome them always, and thanks for watching, and good luck to everybody.